What is up, guys? I'm making another video because I've been slacking lately. It's just been a crazy month. Gotten into automation. I'll give y'all a little sneak peek of what is going on with that. This is what my setup looks like. I'm going to show y'all what this system looks like and how it trades. This is the strategy that I've been using. It's an automated strategy. It's developed by Emerald Edge. They are a company affiliated with High Strike as well. Very solid guys, solid team. Here's how it works. I'm not going to spill all the sauce, but basically it's just looking for momentum changes and breakouts. It is very reliant on strong trends and strong volatility. If you've got those two things and you turn this thing on, it's going to absolutely cook. So on ES the other day, here is a short position that it took. You got the sell signal here because it was breaking out of the range. And then this would have been trailed all the way down until it was stopped around here. Another sell signal, so it entered another position. And then the stop is around 1 bar, so it would have gotten stopped out around here. From there, you're making about, that's probably altogether 30 points on ES, which if you trade NQ, that doesn't sound like a lot, but when you trade ES, every point is worth $50 instead of on NQ where it's only worth $20. 30, 40 points on ES is 60 to 80 on NQ. If you're trading anywhere from 1 to 2 minis, this can get pretty serious. A move like this on ES, you're looking at probably about a close to $4,000 to $6,000 trade. If you caught anywhere from 60 to 80 points with 2 minis, it would be pretty nasty. Just showing y'all the setup and what is to come. I'm going to probably be, I can't fit this whole screen in, but anyway, as you can see, the past 2 days it's done really well. This is probably maybe 30% me, and it's probably about 50-50. So in the last 2 days, me, and with the help of Emerald Wave, which is the algorithm that we're using by Emerald Edge, you're looking at about $4,000 in the last 2 days. I was really light on the trading this week. I really only wanted to come in as a participant. Once I saw that volatility was coming back in, I was just sick of getting chopped up and beating my head against chop. Really just yesterday and today, that's what we're looking at with some trades that I took that we'll go over here in a second. And then some assists by Emerald Wave. It's about 50-50. I'm profiting about $1,000 a day, and Emerald Wave is profiting about $1,000 a day. We're killing it. We're a good team. We just got to keep it going, which we can do if we just stick to our strat. All right, the charts, the other charts, the manual traded charts that aren't Renko. All right, so here's what we're looking at. This is kind of the state of the union, so to speak, on Nasdaq, and this really applies to ES too because they trade pretty much in tandem. What's been going on? We had this tariff sell-off. All right, so here's the thing. Start of the month, we had this sell-off, caught a bid down here in this demand zone where we got some resting liquidity. Traded up into all-time highs, and then we've been stuck, stalling out in this channel for about a week. And if you've been trying to trade this, you know that it's been a nightmare to trade. It's just no volatility. I mean, look at these candles. This is how many points? 40 points, 30 points. Jesus, look at this. The open and close are within somewhere between 8 to 10 points. You're looking at a candle that opened and closed within 8 points. So it's just been it's been a nightmare. And then what I've been saying is we're out of liquidity. There's no real external liquidity to draw on to the upside. Really all we can do is either chop and have market makers just churn liquidity through stopping everyone out like every 10 minutes. or we can get a sell-off going into hopefully rate cuts, and that's what we've got. So we traded in this channel on Tuesday. We got this move to the downside, formed a daily fair value gap, which is, that's a big move. If you form a fair value gap on the daily, that's not too common. And not only did we form a fair value gap on the daily, but it's a very significant one. That covers, it's a 300-point fair value gap. Or no, 200-point fair value gap. Excuse me. 215 points pretty much, which is huge. And the next day, so as we broke out of this channel, what did I do? I started marking out the draws on liquidity. So what are we looking for going forward? We've tapped this demand zone where this resting liquidity is. You can see it better on the 1 hour is probably the best. My mouse is super messed up. Okay, let's actually go to the 4 hour. All right. So you can see as we're stair stepping up, what's happening is when you form these bottoms, you're gonna have a lot of stop loss orders, and there's gonna be just liquidity built up in these areas as price kind of stutters around this area. A lot of people are gonna be entering and getting their stop losses down here. People might be putting limit sells to enter a short position if price were to break this level because it establishes support. Etc. There's just going to be a lot of ways that market makers and the algorithm can bring cash into the market by penetrating that zone. And that's exactly what happened here on this breakdown out of the channel that we had marked. First target was this draw on liquidity right here. Slammed straight through it as you would expect after trading in a channel for close to a week. Actually, yeah, for a full week. Then the next zone that was taken out was this right here. Wednesday, we opened up around here. We were targeting this draw on liquidity right here. From Wednesday's open, there were two potential setups we could have had. We could have had a retracement into this fair value gap that was formed, and we still have not tested this fair value gap yet, which what it tells me is when we do get back to this area, considering there hasn't been a lot of consolidation on the other side of this fair value gap, what I'd be expecting if we do retrace back into this area from here on out after this liquidity's been tapped, especially if we tap this liquidity down here, which is kind of what I'm watching for tomorrow on Friday, is to see whether or not whether this double bottom here is actually going to be respected, or if this kind of bear flag looking structure, which this wick kind of throws it off to where it's really not a bear flag, but just the structure in general is looking pretty bearish. Huge seller's wick on this candle, and then just indecision from there, and not a lot of depth to these buyers' wicks on any of them, really, so to speak. But this is definitely a strong zone of demand. You can tell by this wick right here. Not a single candle was able to close within this zone. So clearly buyers are present here. And that's the thing. A wick is going to tell you where the liquidity was, and then the candle body close is going to tell you where buyers or sellers, whichever way, were finally able to suppress and absorb either sellers or buyers going against them. So the wick is going to show you in this example, sellers were able to completely tap into this demand zone in this resting liquidity here, but buyers stepped in and were able to absorb sellers up to about this point right here, which is around 23,175. So below that level, there's plenty of buyers that are willing to enter the market. And even after this massive candle to the downside, you see that wick into this demand zone and a close above, which is impressive for the reason that usually a candle like this is going to spark a lot of fear and panic selling, etc. And even just when it starts to tag these stop orders that are resting around here, this candle could have easily built up enough momentum to push down into at least 50% in here, and then have a few more bearish candles kind of fall through the bottom and either tag this or just kind of curve back in. But the fact that it fell and immediately found buyers here just kind of shows me that there might be some institutional participation at this level, which I'm almost certain there is, just based off of what I'm looking at. So, that being said, the scenario is going into Friday, Powell speaks, and we get a retracement up into this fair value gap, or, close to it. And then Monday, we get a full-on blow off top. Rates are cut. Everyone's happy. Risk on, hot finance bro fall. Risk is on. It's hot finance bro fall. Everybody's getting into the market. Hooray. Flip side of that coin, if that is not the case, what we could see, and this is the thing, this is why, and especially in 150K accounts, if you're in prop firms, waiting for situations like this, they come like maybe once, twice a week if you're lucky, but at least like 4 times a month. If you can just sit and be patient with a 150K funded account and wait for setups like this where there's two outcomes and both are going to be equally as volatile, you can watch this on Friday tomorrow, plot out a 5-minute orb, or even a 15-minute orb if you want to really be patient and nice and have a lot of discipline. And you know that there's 2 zones, one being this fair value gap where the market is going to want to revisit to try and rebalance what was going on in this area, or this resting liquidity 300 points below where you're currently trading. Either way, you're looking at a 300 to 400 point move. So you can get a lot of good size on in this situation. If the orb breaks to the upside, you put on a 150, 2, maybe 3 minis if you're really feeling ballsy and want to put a tight stop. You're looking at really good risk reward here. Let's say the orb forms tomorrow and the top of the orb is somewhere around the skyline right here. These are voodoo lines, and then you're targeting this fair value gap. You're looking at a 3 risk reward. It's on the 4 hour. You'd probably do something more like that. Yeah, that's that's like a 7 risk reward if you're targeting a breakout of the orb and then a retracement to rebalance this fair value gap by trading into the 75% zone. That's a massive trade right there. And on 3 minis, get out of here, dude. You're fucking could buy a car by the time you take profit with all that. And then here you're targeting this drawn liquidity here, or break to the downside. That's even better. That's an 8 risk reward. So point being is if you're just patient and there's volatility in the market, you will get good setups. You don't have to blow your account trading bullshit price action. You only need like 5-6 good trades a month. And if you're patient, let's say you don't win one of those. Okay, cool. You risked maybe 1,000 and you're looking to make like 6,000 to 7,000 if you hit your trade with a risk reward like that. I'm not saying every trade is going to be a 7-8 plus risk reward. They're not. They're just definitely not going to be those all the time, but they are going to show up a few times a month, and you just need to be prepared and ready. The 150K accounts is, you got to be like a hunter with 150Ks. With 50Ks, some reason, a lot of intraday trading works in those. And I don't know necessarily why, but when you're trading a lot of size, which you have to do in the 150Ks because you have high profit targets, you need to be almost more like a hunter. You're stalking the market day by day, waiting for that A+ setup. And then in times like this, you pounce and you put on some size and you get the job done. And you do that a few times a month and you take your payout. And after a few months, with the, especially if you're copy trading, the 30, 40, maybe even 50K if you're copy. I mean, you can have up to 5 of these fucking things. So it can get crazy. It can get crazy fast. And it just takes discipline and patience and skill and blood and sweat and tears and the loss of friends and family and money and sometimes joy and happiness and maybe your soul. So anyway, that's kind of the state of the union. All right, so what's more likely with Powell cutting rates? I really think the most likely thing, and I could be wrong, to assume that we're going to trade this far back and take out all of this liquidity, which would be a really deep pullback. That might be a little hopeful, honestly. I don't know. I'm not going to pretend to know what the market is going to do because I don't, and nobody does. But I would not be surprised to see this take out this liquidity here to fuel a seriously absurd move to blow off this top right here and make a crazy move into all-time highs, probably somewhere, honestly, probably somewhere around 2,500. Would not be surprised. But what happens after that? Probably a huge correction. Not gonna lie. I think a blow off top to 2,500 would really just be a macro liquidity grab to just absolutely pull in as many longs as possible and then smoke them all with a massive short position. That's a little tinfoil hat-ish. That's all speculation. We won't know until we get there. But for tomorrow, what I'm watching is a pullback to this 4-hour order block, kind of demand resting liquidity area. And then we will target longs from there. So, I mean, honestly, we could probably bottom tick this tomorrow if we get this. Because, I mean, we're so prepared for what would be going on and what the environment is and what the situation is, etc., etc. I would be very confident taking a short on the open on Friday to this as my target. And then as we sweep this, find some buyers, I would be looking for longs. I would be looking for longs. Especially if we tapped this, like the bottom of this, like we did with these right here. I mean, come on. So that's really that's it. I just wanted to get back in the habit of making videos. Editing is hard, and you have to practice. So, yep, that's it.